Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the Tackle Trading Market Recap for Tuesday, the 17th of July. Little bit of selling here today. Good afternoon, Scott. Welcome out, Lauren. Hello, Linda. As always, guys, great to see you. I hope you had a good day in the market. A little bit of a pullback. Started really flat very early, but then the dreaded trade war words came and it kind of sparked a little bit of a sell-off, but I don't think we should get too carried away. We didn't even close below 3,000 on the S&P, so I don't know if we should call it a sell-off or not, but it did spark some selling on the intraday. And welcome out, Micah. Great to see you, my friend, as always. Of note, tech was a little hit the hardest, from kind of things have been performing well, a little more selling over there in tech. Energy continued to sell off as well. We did have a nice pop on silver today. Natural gas, on the other hand, it kind of bit the dust. And welcome out, Paloma. Hey there, Ilka. Great to see you. Hi, Fortino. Hope everybody had a great day trading. Pretty decent day in the industrials as well. Our banks, for the most part, the banks that have reported so far, pretty decent earnings. Goldman Sachs, JP Morgan, things are looking okay. Didn't see a ton of price action to maybe reflect that. Maybe let's just let the rest of the week play out. I don't know. And welcome out, Janine. Great to see you. And hello, Patricia. Now, on the earnings front, we do have a handful of S&P companies here tonight, UAL being the big one, but Cintas and CSX, railroad company, coming out here tonight after the market closes. And then tomorrow before the market opens, we've got our old friends Abbott Laboratories, ABT, Bank of America, US Bancorp, PNC Financial, Progressive, so starting to get into some of our insurance companies as well, as a handful of other names. So not a huge slate of names reporting before the open, but certainly some fairly decent sized S&P 500 companies. So we are in the middle of earnings season, as if we needed any reminders, right? So started off a little bit slow. Then President Trump kind of says something along the lines of the trade war's got a long ways to go, which is fair. I think probably most people think that, but it did kind of give the market a little bit of a jolt, saw a little bit of selling, kind of fluctuated once kind of that initial, oh, wait, this isn't a sell-off or anything to panic at least about yet happened. And we kind of back and forth throughout the rest of the day. But looking at the intraday here on the S&P doesn't really lead me to believe that at least technically it has to pop back up dramatically here tomorrow. I wouldn't be surprised if we see a little more of a pullback. We've got a pretty decent slate of earnings, so depending on how that goes, if it's predominantly miss or predominantly hits, maybe that can prompt it one way or the other. But again, looking at these intraday timeframes, even the hourly, it's hard to say much, right? So certainly maybe in line for a pullback, but that makes sense, right? After breaking out, we've hit all-time highs much of last week, the week before, and the week before as well. So things could use a pullback, for goodness sakes. We didn't even test the 9 EMA on that daily time frame. So right now it looks like on the intraday level, a little bit of selling pressure, nothing dramatic. I think we probably at this point are probably pulling for a few more days of moderate selling, but we'll see if that's what we get or not. I don't know if we should hold our breath there. Very similar over in the Dow, held up a little bit better, a little bit of a doji, but really the same type of a day over in the Dow. We're kind of extended up a little bit, or at least it feels that way. So maybe, a pause, let some of these earnings come in, whether that's in the form of a consolidation or a pullback. Maybe that's what the market wants right now, still flying way above the 9 EMA at all-time highs, even hitting an all-time high here on the Dow today. So again, maybe we should mentally prepare for a pullback throughout the rest of the week. I don't know that that's what we'll get, but that's about as far as I'm willing to go from any selling perspective personally. Little more selling over in the NASDAQ, but again, it really didn't affect our technicals at this point. On the NASDAQ, certainly would be interested if we work our way back into that old breakout around 7,850 somewhere in that general ballpark, or that 9 EMA. So again, not a whole lot to see here. Little more selling than maybe the market's been used to this last little bit, but nothing really to get too carried away about, in my mind at least. And lastly, over in the rut, doing what we love the rut to do, a little bit of this, a little bit of that, going nowhere, right? Continue to trade within this same general, 1560 range that it's really been gravitated toward over the last couple of weeks. Not a lot to see here. The only real signal, I think, for me at least, would be a break of this resistance for a little bit of a bullish, burst, some upward movement. Whether that's tradable or not, I don't know. That's probably up to us individually. But beyond that, really just going to continue to trade it sideways, right? And for us Condor players, we're perfectly fine with more of this on the Russell. As we move into the sectors, it gets a little more interesting because all it was a little profit taking today, right? On the indexes for the most part. In the sectors, a little more interesting action. XLB really started to run here today, and it was really on the back of Dow and DuPont. Really strong day here on Dow. Of course, Dow and DuPont had merged not terribly long ago, of course, recently split into different companies. So that's why, this is Dow. They've been around forever, but their price action doesn't suggest that looking at the chart. A break above that could be interesting to take a look at here. And then on old DuPont here, not quite as pretty of a chart, but very similar in price action to the way that we moved on the sector ETF. I continue to like this area. Of course, silver having a decent day probably doesn't hurt it. We didn't see breaks on the ECLs and the LINs of the world, but that is okay. Still hanging around, still a breakout candidate until it's not, right? So I continue to like this area, still like things that are breaking resistance. Really impressed with that Dow chart. I don't know what exactly to make of it. It's Dow. I know it's been around forever. It's not like a new IPO, but it doesn't have a lot of price history. So I'm kind of debating in my head, do you do anything with it, or do you, whoops, wrong one, or do you just hope it's showing strength? It's certainly a big component of this ETF. Just hope it kind of carries some of the other chemical companies along with us. I'm not sure. At least I don't have to make a decision today. But I might have to pretty soon. Knocking on the door of resistance. That's certainly a little bit of a W type of a vibe. And welcome out, Pascal. Great to see you, my friend. So that's where we find ourselves. Still liking it. Do need to keep an eye. We did come off of that high, once we approached that resistance level. I don't think that's a huge deal personally. Support, I do think we have a pretty good idea that it's going to be down here at this 57 range. That gives out, maybe we start to see some weakness, but as long as that holds, I'm continuing to hold a bullish outlook personally on the material sector as a whole. Over in energy, another day of selling off of that resistance level. A lot of pressure right now in energy. Of course, we looked at XEC on Friday and here yesterday, breaking down here pretty heavily today on some pretty decent volume. You also have APA, another one that I found here today, selling into a pretty heavy level of support. Again, pretty good volume, unlike XEC. Hasn't broken down just yet. So certainly if we're still looking for selling opportunities, they're over there. And again, we don't have really strong sell signals, in my mind, overall on this, at least until we break this support zone down here at about 62.25 on the ETF. We're really kind of sideways. We're just kind of in the move from resistance back to support, right? At least as of right now. So if we do see some upward movement, shouldn't be terribly surprising if we can see a breakout. Again, I still kind of think, and will just kind of depend on when and if it happens. But I still think ExxonMobil could be an interesting breakout candidate if we see some upward movement. Right now, as long as we're in this, I have no problem with trying to trade, individual components if that's what you're looking to do. But making a really definitive stand, I'm bullish or bearish on energy, I don't see it. It's got to come out of this range. And so, while it's certainly a little more bearish price action to start this week, we do have some breakdown candidates if we're interested in them. Overall, I don't think I'm bearish on energy. It's just in the downward swing, at least until we break this support zone. If that breaks, much different conversation. I think we could probably even do something like this at this point in time. I'll just kind of draw that on there. That would break our trend. That would be a little bit of a double top M type of a pattern if we broke that support. So might be a signal from the bearish side. So we might actually get a signal one of these days in energy. It, for me, still is not today. Again, for the most part, solid earnings on our banks, but we didn't really see a lot of price action. Goldman Sachs kind of running up here a little bit here. JP Morgan, decent day here as well, or decent report as well, kind of coming off of the lows, but didn't really see a ton of movement. Maybe it's just, my theory is there's still lots of financial to come out. These were some huge names, and we're all already kind of into it pretty good for financial earnings. But I guess I'm biased. The way I'm seeing it is let's let the rest of, or at least a good chunk of the rest this week play out before we make any decisions. And so whether that's really the case, that's my case. So I don't know if that's the case broadly speaking, but pretty decent on the earnings front so far in the financial sector. In a little bit of a pullback phase. Again, our signal probably is going to be either a little bit more of a pullback, which we'll have to let develop, or a break above these highs that we set up here Friday and yesterday on the ETF level. But we're still, again, we're above the 9. Things are looking pretty strong, still using that, kind of testing that old resistance as a little bit of support. Still a lot of earnings. I think we do have to be careful on the financials as we work through this week in particular with the big names. Over in the industrials, a good solid day. Took out that little intraday high that we established on Friday and yesterday. Had a pretty good showing for the most part. 3M, really interesting chart. And I think you have to look at its weekly to appreciate it. But looking at its weekly chart here, and again, we still have some time, right? There's still several days left before the week is over. And welcome out, Amy. Good to see you, my friend. But we, as of this very moment, if this were the close, if this were the Friday conversation, we've got higher lows. And by virtue of breaking, that resistance, we've got higher highs, and we would be closing above that 9 EMA, which would be a pretty decent reversal signal. Now, we've got earnings next week on 3M. So maybe if we're thinking about a trade on 3M, maybe our hope is that it doesn't do a lot between now and then. I won't touch it with only 9 days until earnings, regardless of what it does. But that's an interesting reversal pattern potentially developing on 3M. A lot of movement here today. That certainly, too much more price movement to the upside, I would imagine would be hitting bearish stop loss for traders who went into this as a bearish retracement when it ran into that 50-day moving average. Of course, the railroads had a decent day here today. So a little bit of nice upward movement in there. Been a little bit slow on our defense. They've just kind of been hanging around, really haven't been moving too terribly much as of late. You had JBHT, and they were, not a huge company in the S&P, but they did report earnings gapping up pretty heavily, of course, smacking right into the 200-day moving average. Always a tough way to start your morning, but a really good response. FedEx and UPS, too, both had some pretty decent little days breaking resistance on FedEx. A little bit of a reversal type of a pattern going on over here as well, especially if we can actually hold this breakout. Looked a little stronger earlier in the day, but closing above resistance, not a bad thing. So industrials, I continue to be comfortable with them as long as we're holding that support level. Where did we go? Whoops, hit the wrong button there. Always helps if I hit the right one. There we go. As long as we hold this support level, I'm comfortable. Got a little bit of overhead at 79 to keep an eye out for on the ETF. Beyond that, if we can clear that out, there's really not much until 80, and I know that's not a lot, but there's room, I guess, is what it helps illustrate, in my opinion, at least. We've got a pretty good idea that this 76, 30 to 40 range, this support level that we've now tested twice, is pretty darn important. So from a selling perspective, I think that would have to give out, at least as it sits right now, before be looking at anything too bearish over within the industrial sector. Of course, we saw the NASDAQ leading the way down a little bit. No surprise, a little more selling here in tech. While not an S&P company, you did have a strong breakout on Roku. Really strong break, nice little spike of volume, nice all-time high. maybe we need a little bit of a consolidation or a pullback depending on our rules. I always have a hard time if we move that much because my stop loss, in my opinion at least, needs to be down here below that breakout point. And so a little bit too much movement, too much of a breakout today. There is such a thing, at least for me, as too much of a breakout. It's just hard to find. But a very nice, stock maybe for the watch list going forward. If we could get a little consolidation or a little bit of a pullback into the rising 9, into the breakout point, might be something interesting over there. But that was kind of the exception. While they aren't an S&P company, we did see quite a bit of selling here in tech. Microsoft down, got earnings in a few days, so whatever, I suppose. Visa, Intel, the semiconductors were certainly down here today, pulling back a little bit off of those highs. An interesting one to be keeping an eye on in the next few days. For me, there's no way I could see this being a tomorrow thing. So yeah, the confirmation would be tomorrow, Ilka, and the risk to reward, I know me, it's not going to be there on Roku tomorrow, right? But that doesn't mean that breakout can't develop into something for us later in the week or maybe next week. And speaking of developing, Oracle, little bit of a pullback going on. I can't see any scenario where tomorrow is the entry point for me, at least. But we did have that strong report. We've got a lot of time till our next earnings, kind of in a pullback. Anywhere towards this 20 / the old breakout point could be interesting. So I'm going to be keeping an eye on Oracle and the development over the next couple of days. If we can kind of start to flip that intraday trend, start to get those those turnaround type of candles, might be something there. But as of right now, looking at the intraday, I mean, we are in a pretty darn bearish trend on the intraday. So I can't see, for me at least, how tomorrow is the day. And if tomorrow is the day, I just have to wave at all my friends in Oracle and wish them the best. But certainly probably that goes into the sector as well. At least as of right now, I can't see really any way that tomorrow is the day that we're getting all of these great signals. It looks like we're either going to pull back a little bit more or go into that little back and forth sideways, build a new ceiling for us to try to break through a little later in the week or here next week. Pretty darn bearish candle, much like Oracle, kind of top to bottom on the bearish side. So got to keep an eye on it. Right now, we should probably, in my mind, expect a little bit of a pullback on XLK, and really back in this the $79.50 to $80 range would make quite a bit of sense from a technical point of view. But keep an eye on that 9 EMA. As you all know, when things get ahead of steam, that can act as a good excuse to buyers, right? So not much action over in XLP, and the staple sector here today held up better than the rest of the market, relatively speaking. Just a doji day up top. Really not much here to say that is at least interesting within the staples. Continues to look very much of the same. Costco, of course, really has been a runner after its little breakout back here, kind of flatlining here a little bit here today, but much of the same. Still looking for a Pepsi breakout. Still haven't got confirmation. We've breached it a few times on the intraday, but never closed above resistance, at least according to my rules. We have not, but still think that it belongs in a breakout watch list personally. So much of the same going on over in staples. Not a lot of movement here today. As you saw, whenever we see a nice flat doji closing at 0.03% up or down on the day, it usually means just a day, right? Kind of a dull type of a day. We did see a little more selling over in utilities. Again, I'm not concerned about this, but I'm also not terribly surprised. I feel like I know utilities, and I feel like they're not constant runners. I feel like they take breaks. And so, once they kind of started to struggle at that resistance level, I decided, as you guys know, to kind of make the call before any new initiates into the utility portfolio goes in. I want to see that break or come back into support, or that 50-day moving average on the ETF. That could be in play as well. Still overall bullish, really struggling though at that resistance. Our signal, in my opinion, really needs to be the breakout at this point, being pushed down off of that resistance level. Trend still very much intact, though. Makes sense that if we're going to struggle somewhere, resistance is the place to be doing it, right? At least that makes sense from a technical point of view. So really nothing has changed. Still waiting. If I own utilities, I'm happy with where it is. If I'm looking for new utilities, I'm waiting for that break of that resistance level. Little more selling over in healthcare. It just continues to be a little bit on the volatile side. J&J, of course, coming out with earnings and not particularly great look. We did have a little bit of a beat, but not a very respectable or happy response to that earnings announcement. I don't know what, if anything, we're supposed to do with J&J's chart. Of course, we saw ABT, another larger percentage stock that makes up a decent percent of the ETF, reporting here tomorrow. Still much of the same. I think we have to be careful. A little bit of volatility should be expected. We do have a pretty good idea that this top up here around 94.40 is a resistance level worth respecting. And again, things very likely will develop, but as it is right now, that would be a pretty nice signal. Very clear error, very clear space until the next level of resistance at 96. But we're a ways away from that discussion. I don't think you can be overly bullish or bearish on healthcare right now. I think we kind of take it one by one. We took a look at CTLT yesterday on a pullback, still kind of in that pullback phase, still need to see some upward movement. So if I am looking for pullbacks or bullish opportunities, they're out there, and there will be bearish ones out there too. But I do think we still do need to be a little bit I expect more volatility, whatever that might mean to you. It might mean different things, but I do think the right way, whenever something kind of gets a little bit, moving and shaking, I think the best way and best approach is to assume it's going to continue to do that until it's not anymore. So really not a whole lot to see, kind of in the middle of a range. I would put support way down here in that 90 to 91 range personally. So looks like we're kind of in a little bit of a sideways rut as we kind of play out all of this news cycle that we're getting. Over in the discretionary, Doji Day, very dull, not a whole lot to see here. Things just continue to be very strong out in this space. Overall, I think we have to be looking at this, if not the most bullish, certainly close to the top of the list as far as sectors goes right now. Nothing really interesting to say here. We are kind of flying away. A pullback would be probably very nice for some of the stocks within the discretionary sector right now. No great reason to think it has to happen tomorrow. Maybe if the market overall sells off, maybe that could put some pressure on the sector as a whole. But right now, it's looking, even some of those we've talked about, even some of the perennial bears, some of those brick and mortars have held up, right? I wouldn't go so far as to say they're doing great, but they have held up a little bit during this run. So still very bullish, hitting new highs. Nothing really to say interesting, at least, other than that's a good place to be right now. Over in the real estate, just still kind of having that battle. Is it a pullback? Is it not? Is it done? We've got a doji today, which illustrates nobody's quite sure yet, right? We tried to run yesterday, but we're not able to continue, carry that momentum even throughout the day. Today, everyone's just kind of looking, although there are a few interesting pullback candidates in this space if we're interested in them. You'd have PLD report earnings, or Prologis report earnings here today, decent little response. But EQIX, certainly an interesting pullback candidate. I thought still got a couple weeks till earnings, probably need confirmation, I guess, depending on you, but in an interesting location, kind of right at that 20, at that old resistance level, a little bit of an indecision type of candle. Like to see some upward movement. I think we need some upward movement. Well is another one that you could kind of make a similar case to. I prefer the way EQIX looks personally, but that's kind of a preference thing. So some interesting pullbacks. Don't think we've got the confirmation yet, but it looks like there are some interesting stocks over there. And I'm looking at this overall as a pullback within this space at this point in time. As long as we're, the 50-day moving average, probably the major level to be looking at from a support level perspective right now. I think we just need to see a little bit of movement, but there are some interesting candidates out there if we do find ourselves on the bullish side of things. And lastly, over in communication services, Google was on the hill today for whatever that's worth. I don't know what, if anything, they said, but they held up all right here today, right? Facebook, again, just kind of taking 5. We've got earnings here in a couple of weeks. I hopped into the halftime report for just a couple of minutes today. I heard Tim talking about, and Matt and Tim talk about Facebook, and it kind of makes sense. We only got a week till earnings, kind of in a little bit of a pause moment. So if I were in Facebook, that might be a reason to think, maybe profit taking is not unreasonable with a week until earnings, but that's just me. EA, of course, broke down, and I hate EA. You guys know that. So both as a bull and a bear, I don't like them. So that's probably not going to change. But a nice break of that support level. We did come off of those lows, but if I am looking at it from a breakdown perspective, that actually opened up the door for a pretty easy entry type of a situation where I could either come off of today's low, or if I'm really aggressive on it, I could look to break this upward trend line that we have put together. So if I'm looking, and you guys know me, I'll talk a big game, but I will never trade EA. And so no real reason for me to think about it, but I know that is, my personal thing. I know that's one of my issues that one day maybe I'll get over. Clean close below support, though, whatever I'm doing or not doing, that is certainly not a great look for EA. But overall, the sector just continues to hang out and not really do anything. Much like the market here, we did hold up a little bit better than some of the tech type of companies over in the tech sector, but we're kind of hanging right at that old resistance zone on the sector as a whole. So that's where we find ourselves going into tomorrow. I'm just kind of expecting, broadly speaking, a little bit more of a pullback, but as we saw, even when the market's pulling back a little bit, there can be some great movers on both sides. So still think we're very much in a stock pickers market. The downside, of course, is it's earnings season. Who was it? Whirlpool. Was that WHR? WHR had a really nice little breakout here today. Look at this guy. Oh, isn't that pretty? Breaking some resistance. Increase in volume here today. Nice top to bottom candle. And then earnings are early next week. So a reminder that earnings season can be kind of annoying for directional traders who won't hold through earnings like myself. That's a good looking chart, but it doesn't matter to me because there's no way I'm touching it that close to earnings. So such is life in earnings season, and we better get used to it. We've got a few more weeks of it, right? So over in the VIX, not a lot to see here. A little bit of a doji type of day in the market, a little bit of profit taking, so a little bit of an upward movement in the VIX, but certainly nothing, at least in my mind, telling us anything. We did see some nice movement in the dollar. That little inside body candle was enough for some traders to call this a pullback, and those that did, hats off to you, certainly were rewarded very nicely here today on a very strong candle here. Got a lot of resistance levels, 97.50, 97.70. Of course, the big one up here in that 98.20 range, but a very strong looking candle going into tomorrow. Still, overall, it's neutral in my opinion, and that's not going to change until it does, until the weekly chart, I guess, doesn't look like this. I mean, it's very, very sideways from a larger perspective. So again, a great place for intraday players who, of course, a lot of folks that trade Forex are more intraday players, not everybody, but for swing traders, I don't know what you're supposed to do with that. Lots of support, lots of resistance, kind of smack dab in the middle of a range. Speaking of being in the middle of a range, we've got gold just continuing to hang around within this zone. Again, I maintain the same philosophy, bullish, but not really directionally or new directionally. Great place for cash flow type of bullish plays. But until we come out of this range, I personally believe that it's kind of in that bullish with a side of neutral type of a place, and especially as long as we're holding that 1385 or thereabouts. As long as that's the case, I think we maintain a bullish outlook. How bullish will probably depend on how bullish you are on gold, fundamentally speaking. Technically, we kind of find ourselves in a little bit of a sideways range in my mind, and just going to wait for it. Silver did not want to wait for such a thing, showing tremendous movement here today, breaking that little trend line, breaking yesterday's high. Whether that mattered, it doesn't anymore, whether it did or didn't, right? More importantly than that, breaking that 1560 range, showing a little bit of a bullish signal. I do think for me, I'm calling that a bullish signal personally, and I'm looking to work back up over to 16. assuming I get confirmation, right? I don't think I wouldn't argue that we have confirmation. We need some upward movement, which probably, because of the way it powered through it so quickly, probably means I needed, a pullback or some consolidation before I can get into it personally. But I'm calling that a bullish signal. If we can get confirmation, I'm going to expect silver to try to work back into that $16 range, at least as of right now. Very strong signal, in my opinion. Let's see if we can get some confirmation here. Even better, let's consolidate the rest of the week and break to the upside on Monday morning, silver, if you don't mind. But a pretty bullish signal, in my opinion, at least. On the other side of it, pretty darn bearish signal here today on natural gas. And no matter how you're looking at, we've looked at these guys on intraday, daily, and weekly timeframes, and whatever time frame you use, it's pretty darn bearish. We, of course, took out that low, that little swing low here, and really just free fell off of it. So looking at it on an hourly time frame, we kind of a little bit of a triple top breakdown going on the hourly time frame, on the daily time frame, a little bit of confirmation off of that resistance that really, we've been there over a week now, right? Pushed down, got a very good idea now that this is a big deal. This is a major level of resistance, price-wise, at least, that we need to keep an eye on. Hey, Jimbo, good to see you, buddy. Hope you had a better day than natural gas. I imagine you did. And on the weekly chart, if we were looking at it from that weekly retracement perspective, I'm going to really zoom over here. Doji, last candle, big red candle. This candle, that looks an awful lot like a bearish retracement, on that weekly time frame, with a little bit of confirmation at this point. So pretty darn bearish. The big thing I think we can take out of this is we have to assume that resistance level, which we did, right? We assumed it was a big deal. Whether it was going to hold or not, we didn't know that. But that 250 zone, that breakdown point, we haven't forgot about it, just in case anybody thought that we did. Gobbling up the moving averages, closing below the 20 daily, not a great look if you're a bull, probably a decent look if you are a bear or trading in to that retracement. Lots of bearish activity there. And lastly, over on crude, lots of bearish activity over here, but I don't think we could make the same argument to be bearish on crude that we can on natural gas technically right now, at least as long as we hold 56. I think right now we've kind of established this upward trend, higher highs, higher lows. We're in the pullback phase. As long as we're above 56, I think that's where I'm going to continue to look at it. I look at this as a potential pullback opportunity above 56, but it's not tomorrow. Certainly, we need to slow down. We need to get some sort of a turnaround candle. We need to recapture the intraday trend, because right now the intraday trend is pretty hideous, right? That's a pretty major breakdown on that hourly time frame. So for me, still think this is opening the door for a potential bullish retracement later this week. The break still very much in play, but hopefully with the movement that we've seen, a retracement opportunity does develop now. As long as it's higher than $56, I'm open to it. We'll have to watch this one together, though. It's not here today. You guys know me. I'm never going long after a day that looks like this, no matter how much I may want to. Real quickly, interesting notes. FRC had an earnings miss here today and gapped right below that support level. As you can see, big spike that we would associate with an earnings move, right? Lot of volume and some room to go to the downside, it looks like. So if I'm looking for a bearish stock for my watch list, need to get some follow through, of course, but that's a bearish breakdown in my estimation, at least. If we can get some follow through on an earnings report that clearly, I don't follow First Republic religiously, but it clearly disappointed people, at least the right out of the gates. We looked at Apache kind of hanging out for a potential breakdown if we're looking for bearish in the energy sector. Our Hershey, really strong candle here today. Not much time left before earnings, but a very strong top to bottom candle on the breakout. We also have MSCI here hanging right at some resistance, was pushed down fairly nicely by the end of the trading day, but still very much a breakout candidate, in my opinion. A couple of weeks, almost 3 weeks before earnings, so a little bit of time to work. Ulta, another bullish breakout candidate if you're looking, so there's bullish and bearish opportunities, right? I think we skew to the bull side because, well, the market's hitting all-time highs. I think that's just good common sense, personally. So there's some interesting candidates out there. Certainly Ulta, no confirmation as of yet, but I'm keeping Ulta, I'm keeping MSCI in my bullish watch list, at least for the rest of the week on MSCI. They got not much time, but they got a little bit of time to go. All right, guys, that is going to do it. But very quickly, before we wrap up here today, Emily asked me over on Twitter here last night about risk to reward, and it kind of got me thinking. It's kind of funny. I call it risk to reward, and I'll say 2-to-1 risk to reward ratio, and I've done it forever, and so when I say 2-to-1 risk to reward, I know what it means, but it almost sounds like I'm risking 2 to get 1, which, so I should say 2-to-1 reward to risk, but that is not the way you say it in my head. And so when we're doing, setting this up, I mean, you can call it whatever you want, right? As long as you know and I know what I'm talking about or what you're talking about, we're in good shape. But take something like an EQIX that maybe we want to move into a little bit on the aggressive side. And I'm going to take some mathematical liberties here. Of course, people's rules would say 10% of an ATR above the candlestick high, a close, and then 15%, right? Everybody's going to have some different rules. But for ease and convenience, above today's high, below today's low, right? And we can kind of, do the math individually from there. That's just how we're going to be interpreting that. And I'm risking $2 here or $5 here on an EQIX. So realistically, do I know I'm going to get $10? Of course I don't. I wish I was that good, but I don't feel bad that I'm not, and I don't think anybody is. But is my expected gain at least $10? That's what's important. And I really do believe if we're doing good technical setups and we're setting up our risk to reward to be 2-to-1, it's going to balance out to be 2-to-1. It's not going to be 2-to-1 this time or any given time, right? Sometimes it's, hey, we hit 3-to-1, sweet. Sometimes it's hit 0.5-to-1. Sometimes we just lose right out of the gate. So even you'll hear it a lot of ways: reward to risk, risk to reward. As long as the risk side is 1 and the reward side is whatever your rules are, I would always advocate for at least 2-to-1, if not better. Then that's we're on the same page. So, but I did realize it, and I've thought about it before, but I did realize that when Emily was talking about it, I call it risk to reward, and I say 2-to-1, and I know that I don't mean that I'm risking 2 for 1, but I don't know if everybody else does either. So, RR, as long as it makes sense to you, that's all that matters to me. So, ladies and gentlemen, that is going to do the market recap for today. But as always, been a pleasure. Thank you for hanging out, talking trading with me. A little bit of a pullback going on. Probably should be open to both bullish and bearish opportunities. I believe still skewed to the upside personally, but always open to a bearish play if the technicals are there. The risk to reward is there. So we, of course, have our coaches show going over the next module in the step system for our pro members. So you guys are going to have a lot of fun over there. Enjoy that here this evening. Of course, if you're not a pro member, we always invite you to head on over to tackletrading.com, shoot us an email to team@tackletrading, tell Mark that Frank sent you. He'll get you hooked up, maybe tack on an extra day or two, get you a free trial. You can come see what it is all about. So Ilkka is traveling to Finland for 2 weeks. Wow, that is crazy. I don't know that I'll ever make it out there, but I will absolutely do so. Ilkka, that is great to hear. We'll miss you. I'm sure you'll be popping in. I know you're not going to make it 2 weeks without popping into the market, but take some time for yourself too. The market will be here when you get back. That's the beautiful thing about the market. Need to take a day off, need to take a week off. It's always going to be here. Have a safe trip, of course. Have a lot of fun. Throw some pictures up on Twitter. Let us see what you've been doing. I'm looking forward to that. That'll be fun. Finland sounds pretty darn cool. That'd be all right. Unfortunately, am stuck in the Utah desert heat for the next 2 weeks, Ilkka, so I'll be jealous of you. So, of course, if you are new around here, do be sure to subscribe to the channel, hit that notification bell. Join us over on Instagram at Tackle Trading, on Twitter at Tackle Trading. You can find me at Frank Martin23 over on Twitter as well. Yeah, Ilkka's a world traveler. And I love it. I love it. And you can do some trading while you're gone, right? And have some good adventure. And so have a safe trip, my friend. And I look forward to hearing how it all goes. I imagine he'll probably throw a picture or two on Twitter, so I'll be keeping an eye open for those as well. All right, ladies and gentlemen. Well, thank you all so much for your time. As always, a lot more fun to do this process with you than on my own. So appreciate everybody's time. Those of you who catch the recording later, thank you for watching as well. Always appreciate you guys too. So get out of here, guys. Have a great rest of your Tuesday. Enjoy the Coaches Show this afternoon. I will see you same time, same place here tomorrow for another edition, I suppose. So we'll see if we see a little more selling, or if buyers say, oh, wow, we sold for a day, let's buy. We'll see where it takes us. So have a great day, everybody, and I will see you all tomorrow. Bye, everybody.